Welcome to your daily 5-minute crypto brief with Satoshi and Nova. Today is July 17th, 2025. I am Nova.
I am Satoshi.
Yeah, we're digging into the last 24 hours using a pretty detailed market report from July 17th, 2025. It's been quite the whirlwind.
Definitely. Lots of volatility, big price moves, and some significant industry stuff happening too.
So our goal, as always, is just to cut through the noise for you.
Exactly. Give you the key takeaways, make sense of this fast-moving space.
Okay, let's jump right into the market pulse then.
Right.
Bitcoin, despite some really sharp swings during the day, actually ended up trending positive.
Yeah, about 1% up, around $118,500.
Exactly. And Ethereum saw a nice jump too, nearly 7%.
Which is significant. But the really wild action was somewhere else.
Oh yeah, the meme coins, Dogecoin up over 8%, Shiba Inu 7%.
And the smaller ones went nuts. Floki, what, 31%?
31%. And Bonk up 20%. That kind of explosion, it always makes you think about market sentiment, doesn't it?
It absolutely does. All that excitement pushed the crypto fear and greed index firmly into greed, around 70 out of 100.
70, wow.
Yeah, and what's fascinating, or maybe concerning, is while that shows high-risk appetite, it also historically flags, potential for quick pullbacks.
Right. Peaks in greed can mean trouble ahead, a bit of a double-edged sword.
Precisely.
But it wasn't all green. Yesterday threw a curveball with that US CPI data.
Oh, definitely. The June number came in hot. 2.7% year over year.
A 4-month high, and that just, well, it instantly vaporized any hopes for a near-term Fed rate cut.
You saw it immediately in the price. Bitcoin plunged, from around $123,000 down to $116,000. Just like that.
It really underscores how tied crypto still is to these big macro indicators, despite the whole decentralization idea.
It's a critical point. That CPI reaction just proves it. The Fed's decisions, or even just the expectation of their decisions, cast a long shadow.
Yeah.
And then there was that weird political moment.
Oh, the Fire Powell rumor, midday chaos.
Yeah, a quick scare that Trump might oust the Fed chair. Markets dipped again.
Temporarily, thankfully. It got walked back pretty fast.
It did. But it's another reminder, isn't it? How quickly sentiment can flip, even based on, political noise that turns out to be nothing.
For sure. Today was a bit calmer on that front. The PPI data came in flat.
Right, producer price index.
Yeah.
That gave Bitcoin a little bounce, but didn't really change the bigger picture on Fed easing. Still looks unlikely for now.
Okay, so moving away from the pure market swings and macro stuff, there were some important industry steps forward too.
Yeah, definitely. Over in the U.S. House, things are moving on the legislative front.
3 big bills advanced, right?
Correct. You've got the Clarity Act, which tries to sort out which assets are securities. Then the Genius Act for stablecoins.
A dedicated framework for stablecoins. Interesting.
And the Anti-CBDC Surveillance State Act. That one pushes back against a government digital currency, citing privacy concerns.
So it seems like there's real momentum towards getting some clearer rules in the U.S.
It signals that, yes, a clearer operating environment might be on the horizon.
And speaking of signals, how about that institutional news? Cantor Fitzgerald.
Whoa. Yeah, that's a big one. The Wall Street firm is reportedly looking to buy $3.5 billion worth of Bitcoin.
$3.5 billion, buying up to 30,000 Bitcoin from Blockstream, according to the report.
I mean, that's classic smart money, making a huge bet on Bitcoin's long-term value. If it goes through, Cantor Fitzgerald becomes one of the biggest BTC holders out there.
It's a massive confidence signal, no doubt. But does that kind of institutional buy-in always mean smooth sailing for smaller investors? Or could it bring its own volatility?
That's the million-dollar question, isn't it? It absolutely adds legitimacy. But you're right, it also ties crypto's fate even more closely to traditional finance. Could mean new kinds of risks filtering through.
Okay, and one more milestone. Tether's USDT stablecoin
hit a new record, over $160.2 billion in circulation now.
And huge daily trading volumes.
Yeah, it just underlines USDT's role as like the main highway for liquidity in crypto trading. Shows capital is flowing into the ecosystem, or at least moving around actively within it.
All right, so wrapping this up, we've seen a market that's really wrestling with economic news.
Yeah, pulled down by gravity, you could say.
But also clearly fueled by some strong industry progress and enthusiasm. What does this mean for you, the listener, trying to make sense of it?
Well, volatility seems baked in for now, right?
Mm-hmm.
Driven by data, by headlines. But the longer-term view, with institutions getting involved and maybe clearer regulations coming, that seems more constructive.
Today really highlighted both sides. the quick reactive price swings and that steady background hum of crypto getting more integrated.
Yeah, which brings up a fascinating question for the future. As these huge traditional players place massive bets and the rules potentially become clear, how does that change crypto's essential nature? It's a high risk, high reward profile. And what new opportunities or maybe new risks does this deeper connection with the mainstream create for individual investors like you?
Definitely a lot to think about there. Keep informed, stay agile out there. We'll be back tomorrow with another deep dive. Enjoyed the brief? Please like and subscribe. We deliver fresh market updates, macro signals, and crypto news daily in just 5 minutes. Live streams coming soon. Stay tuned.